Hello, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar, and I want to welcome you. So, obviously we had the end of month, a lot of end of month flows come through. We were expecting some dollar weakness. Looks like they got ahead of that move going into the London fix, but we hit 120 on the euro and we rejected and came down pretty aggressively. Now, this is a big deal, in my opinion, because we are setting up for, potentially a double top in the euro if we close or, over the next couple of days, we start trading back below 119. You're going to have a lot of people that are wondering if we saw the recent highs. I was a little skeptical earlier, and have been for the last couple of days because we've seen the divergence with like the dollar Canadian testing these lows here. We had the US dollar Mexican peso that was already showing a reversal early last week. So I've had my doubts about the dollar, how weak the dollar was going to be. Also, I had been mentioning in the chat rooms that, and actually on these webinars too, everybody's been extremely bearish the dollar. I do think eventually the dollar is going down. I just don't know if it's going down right now. I think there is a risk that the euro dollar will get some longs that were late to the party out, and we might come back down towards the 116, 117 level over the course of the next couple of weeks. But we'll see what happens with the close today. I think what we should be focusing on for today, and let me grab this blue line here. Whoops, that's not what I wanted to grab. Let's grab this blue line here. I think we have to be a little concerned with the euro if we close back below, like I said, 119, maybe 119.20, because that's where that spike high was here. Then we have to be a little bit more careful with the dollar, especially being short dollars. Now, there is something that's happening tonight, which I want to point out, is we have the RBA this evening. The RBA is not expected to do anything. They're not expected to make any move on interest rates. However, the market, I think, will be looking past this particular meeting. And some of the reports that I've read suggest that they're not going to be as dovish as the market will hope. One of the reasons why is you have this big move in crude. I'm sorry. We have this big move in copper, this big breakout in copper, and the combination between copper rallying, risk appetite being, strong globally, the RBA might not be as dovish. Now, that may not stop the Aussie from going, coming down, especially if we start to see the dollar strengthen against other currencies. But you got to start watching it against like the Aussie New Zealand, especially if the Aussie New Zealand closes back around 105. If we can close back above 105, that you might see an outperformance of the Aussie against other currencies. The Euro Aussie also, I want to point out this chart as we go into this evening. The Euro Aussie is looking pretty firm. It needs to get above 163 to turn bullish. But the fact of the matter is if we break through this support, if the Aussie starts to strengthen and you see us break below, this 161 level right here, that's going to be pretty bullish, the Aussie. You can see that we'd come out of this channel, and that would be a very bearish event for the pair, bullish for the Aussie. So you might not be, trading the Aussie per se against, the US dollar, because, if you're feeling a little, concerned about like what the dollar is doing, you might be able to look at some of these cross rates and have a better opportunity there. One of the other things I have to mention is Bitcoin just hit new highs, and then we've come off. Now, it hit new highs on Bitstamp, I believe, but that's what somebody was saying, but I don't know if that was the case. Hold on, let me see what the previous high was. Previous high on Bitstamp was 19,666, and today's high is 19. Yeah, I guess today we did hit new highs on Bitstamp, so that's pretty pretty stout for Bitcoin. We have come off a little bit, so let's be a little bit aware of that. I think while you're above this trend line here, which comes in roughly around 17,000, you got to imagine that it's bullish, and it looks like we're going to break out, but just be a little careful that we're just probing those highs right now. Let's see, anything else that I really wanted to mention going into today. Gold's holding this 161% extension of this last range. We are still below the 200-day moving average. We are probing the 50% retracement here at 1762. That may hold for now, but if gold continues to stay weak, that might be an argument for the dollar to continue to climb. Yeah, I feel a little silly because I actually had the euro pinned. I was short the euro dollar in the mid 80s earlier, and I closed it as it dropped into the low 70s, and I obviously should have hung on because I didn't think we were going to come off so much, but we did. Let's see here. Oh, Jason wrote in, excuse me. So Blake, to continue my question on G10 central banks printing, are you saying it doesn't matter and other currencies will go up with risk and the dollar down? Yeah, because Jason had asked, well, if all these other central banks are continuing to print money and provide liquidity, like his comment was, the Bank of Canada is providing more liquidity than the Federal Reserve is. It really is just providing a backdrop for stronger risk assets. And when that happens, Jason, you're going to have, since the dollar is the most, it's the reserve currency of choice, it's the most liquid currency out there, you're going to have people selling dollars, buying other assets as other assets are outperforming. So if people feel that, hey, stocks are going to continue to go up and we're going to see 4,000 in the S&P, and copper is going to go, from 350 to 4, and we're going to see gold, go to 2,000 and beyond, then they have to naturally sell dollars and buy those other assets. So in order to do that, most likely what they're doing is they're selling dollars. So at this stage in the game, unless there's a distinct change in interest rate expectations, meaning let's say people start looking around, they feel that the Fed is going to be the first central bank to raise rates, that will be what puts a bid in the US dollar. But for right now, everybody looks at the Fed and says, well, rates are going to stay low for the next 4 to 5 years. And, everything else should continue to do well. So I'm just going to sell dollars and buy everything else. Right. And even some of these emerging market currencies will be, bought up to a certain extent. All right. So hopefully that made sense to you, Jason. And I appreciate your question in the chat room, and I hope I answered it here as well. All right, guys and gals, thank you so much for your continued support of ForexAnalytix. I appreciate each and every one of you. I'll be here tomorrow morning on the Face webinar. I'll see you guys in the chat room. You guys have a wonderful trading day today, and be careful out there. It's still pretty volatile with lack of liquidity. All right, thanks, guys.